These violent moves that we have seen in the S&P 500 today are merely a pregame compared to what is gonna happen tomorrow. You have your first round of major data coming out in which we have not seen for one in a very long time, and you also have the last Fed speech until the December 14th FOMC meeting. So boy, is it going to be exciting tomorrow. Guys, let's get straight into it. If you like what is provided to you here in this video, and especially if you make it to the end of this video, which I highly recommend you do, hit that like button, and not only that, subscribe to the channel, and let's get into it, guys. So today in the S&P 500, it's obviously not the end of trading. You have roughly an hour left, but the S&P 500 is down about 0.33%, and tomorrow is setting up for a 2 to 3% up or down day, in which I think we're more skewed to a downside move, and we need to talk about exactly why that is. First things first, at 8:15 in the morning, you have the ADP employment change for November. Last month in October, you added 239,000 jobs. We are expecting the month of November to add 203,000 jobs. So if you add more than 203,000 jobs, I would expect a fat pre-market move to the downside. If you add less than 203,000 jobs, I expect a huge move to the upside, and I really do think you need to be at like 175,000 to like 150,000 to get like a 2% up move based off of this data point alone, just because there's going to be a lot more economic data coming out, and you're still adding 200,000 jobs, or expecting to add 200,000 jobs. It's not like we're losing jobs right now, right? It's still adding jobs. It's still making the labor market more tight, right? Which is not what the Fed wants to be happening right now. Second major catalyst will be at 8:30 in the morning tomorrow. This is Central or Eastern time. Eastern time, apologies. You have the GDP growth rate quarter over quarter, second quarter estimate for Q3. I don't expect a big move based off of this unless you do get a big, upside or downside revision, which typically does not happen. And then you got the big catalyst for tomorrow, which is going to be the JOLTS job openings for October coming out at 10 o'clock in the morning. So you will have about half an hour, as the markets are opening. The cash open at 9:30 in the morning Eastern time. You're gonna have a little bit of time before this does come out. Now, last month we seen 10.71 million job openings. These are not jobs that are filled. These are hiring signs, right? That's how many jobs we're trying to hire in America. 10.71 million as of October. Well, this month you were expecting 10.4 million job openings, so about 300,000 less, but still it's too many. So if this comes in at like 9 million, 9.5 million, I would expect a huge rally. If this comes in at 10.4 million or higher than that, I would expect to see a pretty substantial move down in the markets. Now, the biggest thing of tomorrow is not actually the data. It is going to be Fed Jerome Powell. Fed Jerome Powell, if you guys are unfamiliar, is going to be speaking tomorrow, Wednesday, November 30th at 1:30 p.m. He is expected to talk about the economic outlook, inflation, and the labor market. Now, a lot of people have pointed to the fact that the markets are well aware the Fed's going to be hawkish, and I do think that is the case. The markets are pretty immune to hawkish Fed statements, but the one piece of this puzzle that is missing, that Fed Jerome Powell really has not given us, or didn't give us at the last FOMC press conference, was that terminal rate. All he said was it's going to be higher than the last estimate. The last estimate that we got back in September was for 4.6% terminal rate. Now the markets are expecting 5 to 5.25, but Fed Bullard has really been, pre-gaming to the markets. It's in between 5 and 7%. And Fed Bullard also said yesterday that we're going to have to hold those rates throughout all of 2023, which is not something the markets expect. The markets expect 1 to 2 rate cuts at the end of 2023. So if one, Fed Jerome Powell says that we're not cutting rates in 2023, that's going to be new information, something the markets have not priced in. And if the Fed says the terminal rate is higher than 5%, also something the markets have not priced in, and that is what could give you big downside. The positive factor of this is potentially that Fed Jerome Powell gives us no new information, which is a very real possibility. I think it's, to put a statistical, probability on this, I think it's 50-50. I think 50% of me wants to say we're not going to get new information. 50% of me says, hey, the Fed is looking at financial conditions and how much they have eased just over the last couple of weeks. That you might get a higher terminal rate or more information that the markets are not expecting, in which we just went over, because that's a big aspect of this is financial conditions. And when you look at the S&P 500, and you can look at the Dow, you can look at the NASDAQ, you can look at whatever you want, but when you look at the S&P 500 more specifically, from the lows of 2022, we set back here on, I believe this was October 13th, you are still up 15% from the lows. So I think this would be a much different video if we were sitting at the lows of 2022 heading into Fed Jerome Powell's speech, because if he had given us, the same hawkishness or, a higher terminal rate or the things that we have just discussed at these lows, I think that would have possibly set up for financial instability, and that drop would mean a lot more harm to the economy than potentially benefit of getting inflation down. Given the markets have rallied 15%, like we seen back here in Jackson Hole back in August, the markets have rallied so much, the Fed said, yeah, we're going to bat this down. No way in hell are we going to start sounding dovish, right? You're kind of setting up, I think, for the same thing that we got back in August with the last Jackson Hole. Could be wrong in that, but that is where logical common sense and years of investing are leading me to believe. And that is why you can see I do have some small put positions on the markets just as an overall hedge, because my Webull portfolio is a lot smaller than some of the other ones, right? So I do want to put some small hedges on, but I don't really want to go balls to the walls right now. But I think we are much more skewed to a negative move coming tomorrow based off of Fed Jerome Powell and the economic data than a positive move. Now, if you also look at the S&P 500 more on a technical basis, go back in the last videos to make sure and hold me accountable for not moving these lines around, in which I will just tell you that I have not. But you're really at a key level, guys. You could see the ascending level of support that we have seen since the bottom of 2022, October 13th. That is really the level in which we have touched it 1, 2, 3 times, bounced up above, and this is obviously connected from the low of 2022 going straight up. I put this level on a long time ago, as well as the downtrending level of support that we have seen throughout all of 2022 and the downtrending level of resistance we have seen throughout all of 2022. And granted, we did get a break above this and it looked pretty good, and then you got rejected at the 200-day moving average, like a solid rejection at the 200-day moving average, which happened twice so far in 2022. Back here in August was the latest example of this, but as well as that, you did get rejected around March, held above it for a few, and then you did ultimately fall back down well under that 200-day MA. Now, when you look at this, you are forming and you have really, been in the middle of this triangle, in which by the end of this, really over the next 2 days, if you break under this level right here, this ascending level of support, just the level that has been drawn out since October 13th. If you break under this right here, which is going to be around that 392 level tomorrow, you're going to be in for a lot more downside, and you're probably going back down to the 380 level at the bare minimum. Now, if you break above this, if somehow we get a very bullish move tomorrow, well, you're probably going above the 200-day moving average. That's how these long-term levels tend to work. You tend to get big moves around these. So that's kind of my expectations, but do keep in mind, at the same time, the recession fears are starting to firmly take hold, with the 2 to 10 year yield curve that is the most inverted it has been in 40 years. This is screaming a recession. Also, you are seeing big moves in the bond market today. TLT is down about 1.11%. As you know, throughout 2022, bond prices have been falling, meaning yields have been going up. And every time that you have gotten, bond yields coming down in a big way, you have gotten a rally in the markets. And when bond yields go down, this chart goes up. Long story short, when this chart goes up, it's very bullish. You can see that's what happened during the August rally. Bonds started to go up. Bond yields started to drop. Ever since then, it's been a pretty much liquidity problem in the bond market. It was straight down for so long, and then you started to bounce again, and that is what has fueled this 15% rally in the S&P 500. Well, now you're down 1.13% again today, so it's no surprise markets are in bearish territory today because bond yields are shooting up yet again. So important things to watch tomorrow will be obviously economic data, Fed Jerome Powell, TLT, aka the bond market, as well as the dollar, in which the dollar is heading back up a little bit today, up 0.11%. But if this does go higher tomorrow, it's going to mean markets are expecting more tightening and more, quantitative tightening as well, reducing dollars in the economy. And when this chart goes up, very negative. If we get a down move tomorrow in the US dollar in UUP, that's going to be very bullish. If you get an up move in TLT, that's going to be very bullish tomorrow. Not really my base case expectation though, guys. So that is going to be it for this video. Hit that like button, smash it, fucking destroy that baby. Thank you for doing that. Subscribe to the channel if you have not already. If you made it to the end of this video, thank you for watching, and I will see you in the next one.